Bhasin joining us to talk to us about some top bets as well as what should we make of the moves that we are seeing on stocks. And Mr. Bhasin, I want to begin by discussing Trent as well as Arvind Fashion. Solid numbers yesterday. Valuation by any means is not reasonable for these stocks, but nonetheless, they continue to perform quite well when it comes to earnings. What should one do right now?
Yeah, good morning, Anisha. The stocks have anyway depicted that what the earnings are now playing out. And people in the know of it realize that what retail and the fashion whole brigade, how that's playing out. Arvind carved out its 2-3 businesses much before. One was the demerger of the real estate arm, the cotton business, and the fashion retail. All those three have played out brilliantly for shareholders. We still think that consumer spending is strong. These stocks are not cheap, but they are pedigree stocks in the sense that they've performed brilliantly. And I think that, they are playing to the masses in the sense of fashion retail and the retail outlets which Trent has. It has picked up brilliantly. I think Chroma, their subsidiary, is doing even better. So I think some of parts, this is where you will see why Reliance Retail is getting a market cap of 10 lakh crore. It is telling you that the spending pattern and the demographic premium of the middle class is playing out superbly in India.
Okay, so that was about Trent, but any take on the earnings of Apollo Tyres? Because the entire tyre space as well has been reporting very solid set, good margin expansion, good top line growth.
Correct. And Anisha, if you saw, it's been about 6 months since Apollo was, not 6, about 8 months. It was 180, 190, and in the throes of, not performing when autos were seeing superb sales. The added advantage has been the, ban or not uncompetitiveness of the Chinese imports, which has seen tire stocks, particularly because of the fall in SPT rubber prices, do exceptionally well. Now, Apollo Tyre is obviously more than doubled from its price of 180, 190, and advocating a fresh buy would be difficult, but we still think Apollo, MRF and CEAT are must-haves in your portfolio. Auto sales and the whole gamut of owning of aspirations is doing extremely well. Their cost of input has been on a lower wicket. And I think going ahead also there will be better numbers coming. But this was an exceptional quarter.
We've seen a big cool-off come in crude prices, and hopefully it's going to stay under pressure. What is your sense on whether or not one should look at crude sensitives, any of the OMCs, aviation companies, paint sector?
Yeah, good morning, Aisha. Well, that's the undoing of the market. Who thought that crude will fall 15% in a month? And Indian markets are still at 19,400. So firstly, I would say 19,700 on this Diwali at least, and maybe another 1,000 points on the bank nifty, given that banks have been the laggard, and I think they will be the catch-up. So I would play rate sensitive through the banks on the count that inflation and yields are indicating that the RBI is going to do nothing on rates, and so is the Fed. Like you pointed out, you could add an Asian Paint or an Indigo because of the sheer weight of the metals, but I would go with specialty chemicals. I have been bullish on a contrarian play on SRF and Deepak Nitrite. You can add a Tata Chemical, one of the best plays on soda ash and sodium bicarbonate, and crude fall will definitely add to their margins. The stocks are very, very reasonably priced. So Tata Chemical, SRF, that basket looks very good. And like you said, be with the pedigree Asian Paint and a Berger Paint. Indigo on declines because of the news today would be an added play, because cost of fuel falling means their margins and the type of traffic they are seeing, or the seat occupancy is never seen ever in before. So I think all that will add up to a good basket if you do. But for me, the outperformance would be Bank Nifty.
Okay, fair enough. That's a view coming in on a whole host of stocks. Meantime, let's get in your take as well on what the outlook is when it comes to the entire cement space. Shree Cement, for instance, posted a very healthy set of numbers. How have you read into the overall trends when it comes to volume growth, the demand-supply mismatch within the cement space? Are you sticking to the large caps, or does it extend across to mid caps too, Sanjiv?
Yeah, good morning. So Avan, cement has been on a very, very strong wicket and led by UltraTech mainly because of the large cap nature. It's a key nifty component. Shree Cement arguably is the lowest cost producer of cement not in India, in the world, and their margins have expanded very, very smartly. This is the best time for cement companies because quietly prices are raised, and we know that construction infra activity is at the highest. So I would still stick with UltraTech, and I would add an Ambuja over here. Ambuja ACC are giving a very good entry opportunity. Their pricing power, and particularly Ambuja, because of the port's connectivity, is a very, very smart play over there. So I would put my money on UltraTech and both these play. Shree Cement is a market performer and it will continue to be on the upside. But since it's not an index component, we want to believe in these three names.
The momentum within the real estate space has been evident in the last couple of months or so. Where is it that you're seeking opportunity?
Well, as a disclosure, both those large cap plays, DLF and Godrej, are our portfolio picks, and they've been there for the last 2 years. We think that they are just on the tip of the iceberg, as sales are seeing huge demand and prices are skyrocketing, particularly in NCR area and anywhere you go where they are. Plus, their deliverance of houses, the demand for pedigree players is playing out brilliantly. Prestige numbers and Brigade in Bangalore are doing extremely well. And Shobha is the pick over there as a dark horse. But we continue to think DLF and Godrej are going to trend higher over a period of time.
DLF, Godrej Properties, these are the top recommendations within the real estate pack. Mr. Bhasin, what about railways and power as a pack? Do you think the best of the rally is behind and time to have a bit of a sector churn?
Anisha, yesterday REC PFC again hit new highs, so did NTPC. So no letting up. The left out feeling is humongous. These stocks can go up 30% more. And it seems like they've always reached a crescendo, but all declines are bought into. Yesterday, the small cap index hit all-time highs. So I think the bearishness has played out perfectly for the ETF outflows. And Reliance and HDFC now seem to be on the flattening of the curve on the upside. Reliance is raising 20,000 crore as NCDs. That adds to its kitty. And I think power, railways and PSUs are a must-have. Buy some now, buy some on decline, but don't miss the upside. New highs are meant to be broken on the upside, so don't challenge them. Of course, valuations, and there will be some sort of vertigo when it comes. But right now, who's ruling the roost is the people who own those stocks.
Fair enough. Meantime, also keep an eye out then in today's trading session on the likes of Rain Industries. It's been a pretty disappointing set of earnings with a 90 crore loss this time around and margins having shrunk in the quarter gone by. There's also something like a Mishra Dattu that came out with its earnings with the profits slumped nearly 58% on a year-on-year basis, with revenues growing in the quarter gone by. And Power Grid as well, it was a bit flat when it came to the quarterly performance. Sanjiv, just wondering what the outlook is then when it comes to some of these PSU stocks, in particular the railway names. After having seen a run up, what's the outlook on how you're looking to approach these stocks at the current juncture? IRCTC, for instance, is another result candidate.
Well, IRCTC numbers will be very, very strong. And Aman, IRCTC is not a quarterly play. You have to play this on the sheer business side. 85% of its EBITDA is on the ticketing side, with now Vande Bharat adding to it. 36% is on the water side. Near is a monopoly, NWR, which has got 82% market share, and 16% comes from the catering side. And you can imagine the type of railways to and fro with the new lanes being laid, the frequency of travel. All that means IRCTC is a must-have in your portfolio. The business model is superb. And I think over a period of time, maybe by next Diwali, a 50% upside is very much on the card. That is one of our top contrarian picks in the PSUs, along with Concor and IEX.
Okay, there you have it. That's the view coming in on the entire railway space. Good to have you as always, Sanjiv. Thanks for joining in. Time to